Good morning, all. CamelbackTrading.org coming to you this Monday morning, November 2nd. We are looking at the last 3 days of the SPY ETF's market profile here on Window Trader. And with 70 minutes to go prior to the opening, we are looking at possibly gapping higher the first trading day of November. Why not, right? It's the year of the gap. It would be the 66 upside gap, the 105th gap of the year if we are to do it. Here's our overnight and pre-market, kind of a B shape from Friday night and kind of a P shape from Monday morning, as we are looking to take out Friday's high, officially come back into a 4-day balance the day before the election. We have PMI and ISM today. We have the election tomorrow. The Fed starts Wednesday, but their decision isn't until Thursday this week because of the election. It usually comes out on Wednesday, but they won't be coming out till Thursday. And then Friday we have non-farm payroll job number. So an incredible amount that will affect how this market plays out. We're in balance. We had an inside month where October traded inside the month of September. It should make for something pretty special when we come out of it. Most likely at this sometime in November, but it remains to be seen. We did close towards the lower end of October's range, but that does not mean we have to come out of it to the downside. Let's go over destinations and a game plan for this morning. So right now, for the upside, I'm still going to use Friday's high since it's less than $1. And you never know what could happen in 70 minutes. We'll use it on both sides of the equation. Well, first off, we had the highest accepted price of $328.54 from the 30th. So right now, that's being taken out. Then we have Friday's high of $329.69. Then the overnight high of $332.24. And then $333.39, and then filling that daunting gap at $337.99, a 460-point gap from October 28th. Now, I've always say it's going to be tough to fill a gap like that. We got into it one time. The odds of it filling the next time in there aren't great. However, things have to be put into context. If this election, no matter who wins, goes smooth tomorrow night, then there is a possibility on Wednesday of that gap being filled in one shot if they decide to take this market up. So it's all context. For the downside, if we gap higher, we'll use Friday's high of $329.69. Then we don't have anything to the pre-market low of $326.27, 9 wide at $325.03, and then Friday's low, which is the monthly low of $322.60. So if you take that out, that would be coming out of an inside month to the downside. As you can see, your downside destinations, as well as your upside, are far and wide apart. So this volatility, even though it's going to be inside of a 3-day balance, will continue. Pre-market volume right now, 1.6 million. So again, it's pretty good prior to the opening. So what's the game plan? Well, if we are to gap higher within a reasonable amount, and right now I would be looking to take a call play against Friday's high. If the gap is $1 or less, I'll look to be buying most likely a $329 call against Friday's high. If the gap is to fill, I will be out of that trade and reassess. If the gap does not fill, we don't have anything until Thursday's high, and then obviously the gap above that. I'm sorry, we have the pre-market high first, but that's still almost $2 away from where we're trading. So it would be pretty good destinations on the way up. You take some off at the overnight high, and then I would take some off at Thursday's high. If in the next hour we do not gap higher, and we can't take out Friday's high, then there's a couple of things you can do. You can take a short play, against Friday's high. Because for me, then you're still you're not one-time framing down because I call it balance to down, but nothing would have changed yet if we don't take out Friday's high. So you can take a short play against it. But remember, though, you're going to have higher value to start if that's the case. If you take out Friday's high, then I am out. Now, remember, we talk about M period so many times. Here's M period from Thursday. We tried to get into it on Friday, remember? Failed, never saw it again. So, if you open and cannot take out either Friday's high or take it out and fail, get rejected at M's high from Thursday, you can take a put play. That would be one put play early, one call play early. Again, we had 6 people join over the weekend alone to camelbacktrading.org to hopefully get guidance, education, informational levels to guide us through which promises to be a very volatile time. And then on the charts, so the monthly, day 1 of November, here's your inside month. So the important levels are 354.02 for the October's high, 322.60 for October's low. Decent range, $32 range, just under the $32 range. So whichever way we come out of it should provide something good. 3-month balance. Market imbalance, waiting for more market-generated information. Weekly, we are one time framing down. The next big goal, if the buyers don't get their act together, will be that 319.80 level. Remember, that's a big target on the back of the bulls. However, you can't get to that until you take out last week's low of 322.60. So that's going to be a key level to keep an eye on this week. And then on the daily, I called it balance to down. Right now, if we take out Friday's high, we will firmly be in a 4-day balance, which wouldn't surprise me going into the election tomorrow. The key is, which way do we come out of the 4-day balance? If we come out of it to the upside, you're going to chew away at this huge gap. You come out of it to the downside, you're going to go for that 319.80 level, and then all those other really close weekly lows below that. Good luck trading today. Have a great day, and we'll recap at 4 p.m.